What's up? This is your host Non-Fungible TC, Non-Fungible Today and Non-Fungible Tomorrow. And I think if you've been watching mainstream media today, one of the biggest news is actually Bank of Japan shocked global market with global bond shift. So this is actually a very big news in the macroeconomic space, and I think today it is worthwhile to decipher this. And so without further ado, let's look at this news. So according to CNBC, the Bank of Japan caught market off guard by tweeting its yield curve control policy to allow the yield on the 10-year JGB to move 50 basis points on either side of a 0% target. In a policy statement, the Bank of Japan said the move is intended to improve market functioning and encourage smoother formation of the entire yield curve while maintaining accommodative financial conditions. So when you just look at this article, you just look at the summary, it's very hard to understand. But what does it mean for the markets, right? So if you look at this market actually in general in Asia has fallen, okay? Nikkei 225 falls more than 2% after Bank of Japan widens yield target range, yen strengthens, right? So by doing this, the Bank of Japan has actually made the Japanese yen stronger, right? In the past, if you do not know any context, the Japanese yen was actually falling compared to the US dollar, but now they are making it stronger. So what it means is that there's something that's called the DXY, which is the dollar strength index, which is the strength of the US dollar. Usually what happens is that the US strength is actually compared with global market currencies and also I think stocks and something like that, right? So if the DXY goes down, the stocks will go up, and also the other currency might probably go up, right? So there is some sort of inverse relationship in the macro market. So yeah, treasury yield wise is Japan unexpectedly losing its yield cap. And also in general, if you look at this, Japan negative. I mean, in Asia, all of this is negative in terms of the stock. But Europe market lowers as investor assess interest rate outlook. Pre-market in the US, stock futures are flat, right? As Wall Street continues to struggle. So I'm not an expert on this matter, to be very honest. So I decided to share with you some threads that I found online. Right, so Japan will now allow 10-year yield to trade as high as 0.5%, and while this seems like a minor policy change, it is likely to cause some serious market volatility. So as a normal user or as a normal market participant, we need to expect volatility, right? So Japan has implemented in the past an aggressive dovish monetary stance, right? So the Fed has been very aggressive in the US to raise interest rate, but Japan has been more dovish, right? So the Bank of Japan rate will effectively print at 0% for decades. So they haven't raised any interest rate, right? Large-scale quantitative easing was sent as practice, and a few years ago, the Bank of Japan switched to yield curve control. This was necessary as permanent yield quantitative tightening has led the BOJ to own more than 50% of the Japanese government bond market. Buying more bonds will seriously alter the functioning of the market. For days, there was basically no trades happening in the Japanese bond market. So to keep the 10-year yield low, Bank of Japan moved from targeting a quantity of bonds to buy QE to a qualitative measure, right, which is YCC. If it succeeded between 2016 and today, 10-year Japan bond traded between negative 25 and plus 25 basis points like the BOJ wanted. Okay, so why it matters is because Japan is a huge export of capital, right? So since the 90s, Japanese investors are used to look over abroad for opportunities to deploy domestic excess savings. So what they do is that they deploy money overseas to look for opportunities, right? Rather than deploy money locally. So as July 2022, Japan is the strongest holder of U.S. Treasury, right? So the people, because the yields locally is not that high, they would buy the U.S. Treasury, right? They have accumulated over 1 trillion of USTs as a convenient way to recycle excess savings, right? So Japan is actually quite high in terms of owning the US Treasury, right? So the chart shows how convenient it was for Japanese investors to buy Treasury and cover the foreign exchange risk, right? They will average get 100 to 150 basis point additional return than simply buying domestic government bond. Okay, so what happened is that, Kuruda, which is the Bank of Japan person, announced the 10-year Japanese bond can now trade with a negative 0.5 and plus 0.5, hence widening the band for a YCC, right? So it was a true surprise. So why now, right? So core inflation is rising in Japan. It will be stable around 2% in 2023. After years of relentless easing, right? Kuruda can claim job done and set his stage for a successor to set new monetary policy in 2023. Okay. So, now let me show what the bond market really thinks about this. While economic policy are more convinced inflation will sit at 2% next year, in Japan, inflation swap trader disagree, right? So nonetheless, as half of the domestic bond market, and it says the new policy regime is applicable, bond markets have to adjust to that, right? So simply put, what it means long term is that it shows that the implied volatility for the next 12 months price in for 10-year Japanese government bond is literally 3x what price at the beginning of 2022. In other words, despite being hesitant in pricing sustainability, higher inflation in Japan market are listening to the BOJ and adjusting for new monetary policy regime. Okay. Why does it affect the market, right? Now that Japanese investors are getting positively rewarded to keep the cash at home during a global recession or economic slowdown, and periods of high macro uncertainty, they probably will choose to do that more. This strengthens the yen and negatively affect foreign asset. So what happened is that basically the money is going to stay in Japan, right? People are going to invest in the US Treasury, and the yen is going to be stronger, right? If the yen is stronger, the Dixie is lower. So to a certain extent, that would kind of move markets up, right? The stocks and etc. Or maybe it would move the flow of money from the US back to Japan, right? So when one of the largest capital exporters in the world decides to domestically reward savings with a higher risk-free rate, there's big macro consequences, right? So definitely this is gonna take some time to play out, but that is the reason why a lot of traditional media is talking about the Bank of Japan move recently, okay? So there's also another one, Thomas says that BOJ ruins Christmas by widening the 10-year band by 25% basis point. A message is loud and clear from central banks. The tightening will continue until something breaks, right? That's kind of like the biggest traditional news of the day. But let us have a look at some other news of the day. Interesting news shows that Dogecoin is now worth more than Coinbase. Elon Musk Twitter post shows that users want him to step down. Epic Games got fined $520 million for choosing privacy and safety law violation. So U.S. stocks have been down. U.S. builder confidence is down. Chinese business confidence down. Basically everything is very pessimistic in the world in general, right? For this week, we kind of mentioned yesterday that Friday will have a lot of key numbers, and also Thursday where you have the final quarter-over-quarter GDP. These will definitely affect in the short term the market volatility. So moving on to crypto news. Bitcoin at 16,829. Ethereum at 1,214. So now we are back at 811 billion crypto market cap. So it kind of went up, okay? So to a certain extent, could this be a reason of what the Bank of Japan has been doing, right? Could that be a reason why our money hasn't going, into cryptocurrency, right? So if you look at this, other traditional news, FTX now seeking prompt return of Sam Bankman-Fried's political donations. So FTX is saying that, hey, the political donations, right? Please give it back to FTX. These are the users' funds, right? So next one, according to Coinbase CEO, financial regulators should be limited to centralized actors, right? So smart contracts shouldn't be regulated at the same as centralized custodian, Coinbase chief, right? So he recently came out with a blog, and that's what he said. Meta says that it still believes in the metaverse. Stock is down 64% since the name change, but according to the news, they have been spending 20% in the reality labs, okay? And at the same time, 80% goes to other core business, right? So it does shows that they are committed in building the metaverse, but we really have to see, the adoption for VR glasses and so on, right? So at the same time, BlockFi petitions bankruptcy court to let clients withdraw blocked asset, right? So yeah, I think another interesting big news in the crypto space is Visa teases Ethereum collab aim to actively contribute to crypto development, right? So they came out with a blog post, a paper Monday exploring the potentials of crypto auto payment, right? At Visa, they want to serve a trusted bridge. So Visa definitely has been, dabbling the fingers in the space. I think they own a CryptoPunk as well. But now they're looking at hopefully trying to use Ethereum and also use some tech ways to settle payments. So we'll see how it goes, but adoption for crypto is definitely here, right? So it's no longer, we are still early phase, but adoption is here. So moving on to NFT news. President and COO Daniel Alleger are stepping down to join. Okay, so this is actually one of the big news yesterday, right? The ex-president and chief operating officer of Activision Blizzard, right, which is the game company that brought you the titles Diablo, Overwatch, all those type of game titles. That COO, ex-president, is actually joining Yuga Labs as CEO. So this is actually the mutant ape that he brought, which I find very interesting, right? He bought this mutant ape 4 days ago for 16 ETH. So I think it is really kind of interesting how a lot of CEOs, Nicole is also the previous Yuga Lab CEO. She also owns a mutant ape. So it's interesting how this wallet was actually recently active or created just to buy this mutant ape so that the new CEO has a ape identity. But it's interesting. Like a lot of people are very bullish. A lot of apes are bullish. But I do want to say one thing. The apes are bullish, but because they were showing Diablo, the game's opening party or something like that. I think one of the most important things that we need to know is that they actually hired this person to be a CEO in the first half of 2023. And then it really depends on what performance have been done, what type of hires that he could actually command, right? Because one of the biggest thing is that you usually hire a CEO, Chief Operating Officer, or a president of a company because you want to tap into the network of people who work in different business units. So rather than the production side, in terms of the marketing or events hosting side, I think it will be interesting to see how Yuga Labs really pivot to become a more gaming focused company, really pivot to be a more metaverse focused company. But one of the biggest thing we have to note is the hires that they do. What type of people are they hiring? Are they gonna hire storyboard writers, story developers, producers for this whole other side ecosystem? And does it work that way, right? Doodles teased the launch of Duplicator in January 2023. The team gave updates on timeline, reasoning for delay for the Discord Genesis box will be revealed shortly. Polygon Studio partnered with Hive to support launch of customizable Web3 debit card. Cyberwalker's final chapter of version alpha is live. Okay. And also one interesting thing is actually Hype and Diesel partnered to drop a unique NFT collection, right? So Diesel and Hype is gonna do a unique collection. It is a partnership. It's interesting. The choice of partners is interesting. So now you can actually register your interest here, right? So you can join an email waitlist. I haven't really seen this much, but they actually have a. Actually, it's not. The links are not really. I mean, the mobile responsive stuff. Okay, it'll be interesting to see what it is, right? Is it gonna be wearables for these apes or what? So it's just a video like that. So you can just subscribe. Anyways, guys, that's it for today's news. If you're trading, stay safe. Hope I kind of clarified things. I'm not 100% really into macroeconomics and stuff like that, but that's my understanding of what the Japanese Bank of Japan has been doing. They're now trying to bring back the money back and to keep the money back within Japan. So it really shows you that this is really setting the stage for something to be big that will happen in 2023. As we all know, a lot of people are saying that there's talks of recession, like a very serious recession in 2023. And at the same time, borders are opening, but the pandemic, to be honest, is still there, killing a lot of people. So yeah, we'll see how it goes, everything. Stay safe, guys. This is your host, Non-Fungible TC. If you like the content, remember to like and subscribe. Signing out.